Welcome to Off the Record, talking real estate with Joe and Makayla. If you're interested in the Portland, Oregon real estate market and want the unvarnished inside scoop, you've come to the right place. Thanks for giving us a listen. Okay, welcome everyone to the show. Thanks for joining us. Hello, Makayla Mast. How are you?
Oh, I'm so good. How are you?
I'm good. It's a Thursday in our week right now. You know, Monday, Tuesday, Wednesday always feels like such a scramble and so busy and all that. And Thursday feels like you're starting to wind it down and just get to some of the things that you weren't able to earlier, which kind of feels good.
Yes, I agree.
Yeah.
Trying to plan for the weekend. Mm-hmm. All the fun things to look forward to. We're heading into Labor Day weekend this weekend.
I know, and you're going away.
Mm-hmm.
That's
I'm
nice.
Going up north to a lake house, Port Angeles, and you are going to the Duck game.
I am going to the Duck game this weekend, the home opener. Go Ducks. I probably won't. I don't know. I might go to one or two other games, but it's a whole thing. It's a whole thing going to a Duck game.
I don't believe that.
Well, we've got quite a show for people today, and one of the things that people have been asking about is what are some creative ways I can get into a home that's not going to break the bank? And one thing that we're seeing right now that is the best workaround or whatever from regular financing is assuming a seller's loan, right? Mm-hmm. So we're going to talk about that. But before that, we have our regular segment.
So it's our off-the-record moment. We'll share with you a little, maybe it's a gripe, maybe it's a confession, something off the record that we want to share with our audience.
So my hot take right now is, obviously we look at the industry through our lens and can see things a little bit differently than the regular consumer. But I'm a little surprised right now that there aren't more people taking advantage of the current market, and mostly home buyers, I think. Why are home buyers sitting on the fence? Maybe it has to do with employment. Maybe it has to do with uncertainty about the economy or where rates are still at. But in my mind, right now is one of the best times to buy we've seen in years and years and years, certainly before the pandemic, and maybe much longer than that. I mean, you can get a lot of house right now. Prices are coming down in certain areas and certain price points, and sellers are absolutely willing to wheel and deal, offer credits, provide certain things that they weren't before, and there's more inventory to choose from. And the other thing is, what do they say about dating the rate or marrying or something like that? Date the rate, marry the home. There you go. Exactly. Rates, if they do go down like people are saying, you can always refi, so you're not locked into that.
Right. But like you said, all the seller credits that are being offered right now, you can use that amount to buy down the interest rate and then have that conversation in 2 or 3 years. Mm-hmm.
So that's my hot take.
I agree. I think there's a lot to look at, which is we haven't seen in, since I've been a broker in 5 years. And there's a lot of creative financing options. I mean, one we're going to talk about today. So yeah, I agree. I don't know what's going on in people's minds, but hopefully,
I think the biggest thing is just uncertainty about everything that's going on. And I get it.
There's a lot going on in the world.
Yeah, there is. What's your hot take?
My hot take is I need people to stop talking about fall.
Oh my gosh.
You are not allowed to say the word fall in my presence. I will kick you. I know football is on. I know it's exciting, and I love the fall, but we're still in summer. And until September 22nd, I want to be on full summer vibes. I don't care that kids have gone back to school.
Is that the official date when summer ends, is September 22nd?
I looked it up, yes.
Oh my goodness. All right. Well, I'm certainly not going to say fall.
Put your pumpkins out of here.
Yeah. Oh, no. You're not seeing the pumpkin spice, are you?
Oh, yeah. It's all over the place.
Oh, my gosh.
I walked in Target last night. There's pumpkins everywhere.
Okay.
Get out of here.
I won't be mentioning that 4-letter word.
Thank you. I appreciate it.
Okay. But it is football season, so it kind of means that it's fall.
No, it's not. Not for another month. month, sir. We can enjoy football for the meantime, though. I'm all about that.
Yeah. Okay.
Okay.
Well, a little bit more summer. I can get behind that.
All right. Good.
So let's talk about how consumers, home buyers, can get into their dream home by assuming the seller's loan. Mm-hmm. And I'm not sure that a lot of people know that you can do that or that's available now. I know you have a transaction going right now where your buyer's assuming an FHA loan. It seems like such a no-brainer.
Right. All the stars really aligned on that transaction. So we're just ticking away at it. But it feels like there isn't a lot of education about this. And so at least I see a lot of times, like when we're advertising a home where you can assume an FHA loan, it seems like we get a flurry of people reaching out to us, right? But they have so many questions, they don't even know where to start. And to be honest with you, I didn't know a lot about it either until I really dove into this process. But yeah, great opportunity here.
Yeah. I did a VA assumption last summer. That was a real eye-opener. Let's talk about what a loan assumption is. So a loan assumption is when the buyer steps into the shoes of the seller and takes over their existing mortgage terms. So instead of the buyer applying for a new loan with a current market rate, they continue paying the seller's lender under the same interest rate, repayment period, and balance. So you're just stepping into the seller's shoes and saying, I'll take over their loan at, maybe 2.5, 2.75, 3.5, whatever the case might be.
Yeah, ours is 2.75. It's beautiful.
Wow.
Buyers are so excited.
That is fantastic. The thing to know about it, though, is not all loans are assumable. So what we're really talking about is FHA, VA, and USDA. And USDA is more of a rural loan program, so we don't see a lot of that in the Portland metro area. But certainly FHA and VA there's significant numbers of those in the marketplace right now. So something to be aware of. You're doing an FHA assumption right now. Mm-hmm. I've done a VA one recently in the last 12 months or so.
You did a USDA in McMinnville too.
I did.
It took a long time, but it happened.
Yes. I think if you're looking at the three of those, I would say in the order of most efficient, probably goes FHA first, VA second, and USDA third. Mm-hmm. Some departments, some agencies just have their stuff together more than others. USDA folks were very nice, but completely overwhelmed and not efficient with what they were doing. But we got it done.
That's all that matters.
Yeah, and the VA can be difficult to work with, but they want to get it done. Mm-hmm. And, once again, nice people, they're just restricted with some of the things that they can do and how they can do it. So I'll be curious with your experience with FHA to see how they handle this type of thing.
I agree. So far, so good. I did some due diligence to find, I think the key is finding a lender within the bank who is familiar with this process on each side of it, right? So he's familiar with FHA pre-approvals and also loan assumptions. So I was able to ask around and find the right guy and then just really have good communication up front.
Yeah.
And let him know that, hey, we really want to make this happen. Let us know whatever we need to do. We'll make it as smooth as possible for you if you can just educate us. So we started off on a good foot. So knock on wood.
Let's talk about what the benefits to the buyers are.
Sure. So, of course, that low interest rate. I mean, inheriting those terms is unheard of, really.
2.75.
Yes,
goodness.
It's incredible. And really, that's thousands of dollars over the life of the loan, if not, hundreds, maybe even up to $1,000 a month you're saving.
Yeah, we're going to talk about a side-by-side comparison of assuming a loan versus doing a new FHA loan. And we're going to focus on FHA because that's the majority of the loans that are out there right now. VA is certainly a large number as well, but we'll focus on FHA for the benefit of today's conversation.
Agreed.
Reduced closing costs is another benefit.
Mm-hmm.
Streamlined process. A lot of the fees are out of the way, which is fantastic.
There's no appraisal.
Yeah, the appraisal's already been done.
Mm-hmm.
That's fantastic.
So that saves the buyer $800 to $1,000?
$800 to $1,000, yeah. And simplified financing. So, it's pretty straightforward. Mm-hmm. If you qualify, they just plug you right in there and away you go.
Right. And you have to make sure that the loan allows for an assumption, but that happens on the seller's end before this conversation even happens. So
benefits for the sellers, what a great selling point to have. You know, hey, you can assume our 2.75 interest rate, walk into this and save sometimes thousands of dollars. I was shocked when we did the side-by-side, and we'll talk about this in a second. The amount of money that you can save on this is incredible.
Oh, absolutely. I would say the only negative to both parties is that it's a longer closing. The banks have less people working for them who can push these things through. Right now, our closing date is 90 days out, which hurts a little bit, but there's hopes to speed it up if we have all of our paperwork in order on the buyer's end and we just make sure to hit our milestones as quickly as possible. So hoping it can be done in less than that, but that's definitely a conversation worth having when you put your offer together, you know.
Well, let's talk about the intricacies of assuming an FHA loan. You got to qualify with the lender. Buyers, they still need to meet the FHA credit and income requirements, equity and down payment. You know, you got to cover the difference between the home sales price and the seller's remaining balance, which can be an obstacle if someone's been in the house for quite a while and has a large equity position. You're going to either have to come to closing with that amount, right, to pay the seller, or we had this happen with the VA that I did last year. They just got a second loan to cover that. And there are loan programs out there
which is amazing.
Yeah. So the principal balance owed to the lender is $400. The home is being bought for $550, let's say. So there's $150,000 difference there of equity that the seller is going to expect to be paid at closing, right? So
they'd have to, yeah.
Yeah. So you either have to come to closing with that additional $150,000, which most people don't have, or you get a second loan, and that loan will probably be at, current rates. So you're looking at 6.5, but it's on a much smaller. And let's say you come in with $25,000. So now you're doing a $125,000 loan at 6.5%. And you've got your $400,000 loan at 2.75.
Right.
Still a huge savings.
I think we're in a good window here where when the time 2021, 2022, when rates were low, that wasn't terribly long ago.
Right.
Which means that people haven't been paying down their principal as much as obviously they would have if it was 10 years ago when the rates were like that. So now really is a good time to maybe try and find loans like this that are assumable, because the cash you have to bring to the table might be smaller. Like the one that we're doing, the cash they have to bring to closing, including closing costs, is $90,000.
Right, exactly. One of the other items that the lender's going to ask for is a release of liability for the seller. So, the seller needs to make sure that the lender removes them from responsibility after closing, right? So this new loan is 100% on the buyer.
Right.
And the seller's not in a secondary position or anything like that. And that actually came up with our VA loan that we did, where we were looking through the paperwork and it said, okay, Mr. Buyer, you are assuming this loan and you're responsible, but there was also some verbiage in there about, and if the buyer, fails on this, then the seller's then still responsible. So we had to address that and it got taken care of. But sometimes lenders, they want to make things as easy and convenient for them as possible. The laws and the rules say, no, seller does not have liability on that. So
right.
Some lenders may charge up to $900 for a credit report for the assumption, that type of thing. That all goes into, qualifying for the loan.
Right.
The other item that's kind of interesting is this due on sale clause. So FHA loans made after 1989 are fully assumable. Before 1989, there are still in place due on sale clauses, which means that if the person that's on title sells the home, then the entire amount is owed to the lender. And that's why people that have a loan and have a balance outstanding can't sell on a contract most of the time. Most of the time you see a contract, it's going to be because the person has the property completely paid off, and then they act as the bank with the new buyer. Not really what we're talking about today, but that due on sale clause is certainly something that you want to be aware of. Like I said, anything after 1989, you're free and clear with that. But if it's before then, you certainly want to take a look at that. Realistically, that's 36 years ago.
Yeah, that would be surprising.
I'm guessing it's either paid off or it's a very, very small amount.
Right. Unless they've refinanced 100 times.
So something to consider. So let's talk about a real world example here, Mac.
I love it. I love what you've put together.
Yeah. So home's current market value, let's say, is $525. The remaining FHA loan balance is $480. Interest rate. So that's the scenario that we're looking at. Someone that bought maybe 2020, 21, 22, something like that, which is a lot of folks, right? We sold a ton of homes back then, and the rates were anywhere from 2 to 4%, somewhere in there. So let's say 2.75, because that's what, you're dealing with right now. So monthly principal and interest on the existing loan is $1,959.
Nice.
Yeah. Yeah. If you looked at a regular FHA loan right now at $525 with a 6.75% interest rate, you're looking at a monthly principal and interest of $3,400. So $1,443 in savings. But it's not just the everyday monthly saving. If you look at the 5-year saving and the 10-year saving, the 5-year savings is $86,000, $500.
Crazy.
The 10-year savings is $173,000.
Oh my gosh.
Right? So yeah, assuming the seller's FHA loan can be an incredibly profitable, easy way to get in, and also very, very lucrative to you as a buyer, especially over the long term. I was blown away by that. $173,000 over 10 years. If you want to see this in writing, kind of see how it all breaks down, we'll post this to the show notes. If you go to our website, LivPortland.com, that's LIVPortland.com, and click on either our blog or our podcast, you'll be able to see this show, and the show notes will have this information in there so you can take a look at it. So what are the steps to buying a home by assuming a loan, Mac? What do you got for me?
Well, you need to first confirm assumability, which we've talked a lot about. This is initiated from the seller's perspective, the seller's lender. So the seller reaches out to the loan originator and says, hey, is my loan assumable? If yes, they'll send you a letter in the mail. It has a lot of great information on it, FAQs, and of course the principal and interest broken down for you. Then you apply with that lender. So you have to apply with the lender who originated the loan. That's usually a bank. Of course, usually loans get purchased a couple months after a sale goes through. So there's really like 4 or 5 banks. There's more, but that we commonly see that hold these loans long term. And then if that all looks good, you negotiate your terms, writing an offer just like you would do for any other home sale. And then assuming it gets accepted by the seller, you just move on like a regular old sale. But like we mentioned earlier, it'll definitely be a longer closing, which is okay. It's just something you need to work into your contract.
Yeah. So this is just a win-win situation for everyone, for the buyer, for the seller, and sometimes the seller, by offering this assumption, can get more money for their home, right? And a buyer can look at it and say, oh, wow, okay, I'm getting it at this lower rate, and this seller's willing to allow us to assume the loan. We'll pay a little bit more than that, especially if you look at the 10-year on that, $173,000 in savings.
Yeah.
A buyer can look at that and go, okay, if I paid maybe 10 grand more or 20 grand more, that's still a great deal for me. It's a win-win in the current situation. If you guys have any questions about this, feel free to reach out to us or call your mortgage professional and discuss it with them. We are absolutely more than happy to answer any questions you have on this, but it is a fantastic way to get into a home at a reasonable price. There are a lot of steps that you got to kind of go through here, but it certainly can be a great situation for most anyone looking to buy right now.
Yes, couldn't agree more.
Yeah.
Good info, Joe.
Yeah, I'm pretty excited about this. I think this is a great way for people to get into their next home.
I agree. And now that I know more about it, I think I'm going to encourage people to look for listings that advertise this because
for sure.
It's just a no-brainer. Okay. Should we finish with our last segment, something we're loving right now? It can be real estate or life related.
Mine is both. Mine is both real estate and life related. And I'm going to go ahead and say that I am loving all of the wineries that we have in Oregon and Southwest Washington. I am just blown away. I've been to McMinnville a lot lately. We're doing quite a bit of business there. Just driving through wine country is so incredibly beautiful. And I've taken a few moments to stop at different wineries on my way back from McMinnville, and holy smokes, some of these places are built on some of the most incredible land with these views that are just so impressive. And, you know, I'm thinking about where you got married and some of the other places. It's just such beautiful country. And you plop down a winery and tasting room in some of these spots, and it's just magical. So
do you do, I have to ask, do you do a flight or will you do a glass just and guess?
I am more of a just buy a glass. And if I like what I'm tasting, I'll buy the bottle. You know what I'm saying? Oh,
I do know what you're saying, which is why I love going wine tasting with you, because you are not afraid to buy a really nice bottle and share. You're so generous.
Well, usually Mrs. Reitzug is with us, and you know how that goes. This is wonderful. Let's buy a case. And I'm like, well, how about a bottle first?
Ship it home. I don't care what it costs.
I know. Tonight we're going to a winery in Ridgefield, Washington, for an event.
Do you know what it's called?
Boy.
It's okay. We can report back next week.
Well,
I'm just curious if
I
you know.
will report back, but it's supposed to be beautiful and fantastic. So excited.
You know what we've been hitting a lot lately is Amatera, in Southwest Portland.
It is wonderful. You're like 5 minutes away from there.
I know. It's so dangerous. It is amazing. I mean, the views are amazing. The wine is amazing. They're little bites to eat. They've really stepped it up with the menu.
Is that like a happy hour thing for you guys?
Recommend, yes.
Oh my gosh.
I mean, it's a spendy happy hour, but it's a nice time.
The young newlyweds out and about every night. Look at you guys.
Every night. I wish.
No, you guys are my heroes.
We've been hibernating this week on purpose because my happy thing, something I'm loving, is I'm so excited for this long weekend we have.
Labor Day weekend is beautiful on so many different levels.
Yes, we're going to go up north, like I mentioned earlier. And we haven't done a vacation, the two of us, all summer. So,
oh my gosh.
I know, we're going to take the dogs. We're going to spend time on the boat and just do some hiking. I'm
excited for you
summer
guys.
Stuff.
The Olympic mountain range that drive up there to Port Angeles is so beautiful. Absolutely gorgeous.
Thank you. I'm so excited.
Yeah.
Take some good wine, going with some good friends.
Why not?
That's what I'm loving.
Good. Well, we hope you folks out there are loving lots of different things. If you have a topic for us to discuss, please do reach out. Feel free to go to our website, LivPortland.com, and let us know what's on your mind and what you think would be a good topic for us to talk about. Otherwise, Makayla, have a wonderful long weekend.
Thank you. You as well.
All right.
Go Beefs. Thanks for listening.
Bye, guys. Go Dogs.
Thanks for joining us today. If you're interested in finding out more about Joe, myself, or the LivPortland team, you can go to LivPortland.com. Thanks for giving us a listen, and see you next time on the Off the Record podcast.